Good evening, all. And I am early. My wife's dragging me out. You know, we too are just like everybody else. She wants to finish up going out almost every night now before Labor Day comes around. So I'm there. It is not even 5:20 p.m. Central Time, and she's made me work all afternoon to do it. And I don't mind it. Chicago's getting hot. Weather's getting hot here. Just soon be indoors. So this is your metal report. It is Tuesday, the 22nd of August, 2023. And you're sitting still here in the 1920s. So gold hasn't really collapsed anymore. It has found its legs. Silver seems to have found its leg against the 2300 level for the moment. The copper market, it's all over the board. I don't trust copper because China's done nothing, and I think it's very vulnerable. I think what we've really got in the silver market, the copper market, and the platinum was short covering. The indicators got to the point where you had embedded readings, and one by one they peeled off. And as they started peeling off, the rally began. You normally go to the first closest moving average, and you generally stall out if that's all it is. We'll get to that in a moment here and see it. Interest rates, they continue to just do one thing, adding yield. And all you need to do is, if you get my full newsletter, and you can always go, for example, and sign up for a free copy on the free offers on our website at iraepstein.com. And if you read it, you see what I'm writing about, because it's fairly amazing. The Treasury, U.S. Treasury, is doing just what Ms. Yellen said. They have to get $1 billion in the quarter, and they just every day are putting out $50 billion, $100 billion, whatever it is. And in order to get people to buy it, they're raising rates. That's the effect of what's going on. That's how they're getting this done. The other thing is, in the past, for the past 2 years with COVID, we had the Fed up until they started the tightening process, adding to their balance sheet. As maturities expired, they bought them again. That was a cushion at the other side. That doesn't exist today. They're letting their balance sheet run off. They're threatening higher rates. We have to deal with Friday, when at 9 in the morning, Fed Chair Powell will speak. And no, I don't expect him to change his tune to anything. I think he will do just what he has said. They're data dependent. The labor market has surprised them. The economy is still resilient. Inflation is still running in core numbers too high. It's the service sector that is still red hot. Manufacturing has slowed down. And I'm not in agreement with him that shelter costs are going to fall. All right. I think there's a shortage from what I'm seeing, and we're not getting that. I'm not just talking new homes that you buy or used homes that people don't put them out on the market. Even rentals are not falling in price very much. Why? Because the cost of ownership, as interest rates go up, everything goes up with it, is part of the problem. It'll be interesting to see if used car prices still keep coming down. I was reading a story on Teslas as to how you can buy a Tesla for under $25,000. Your problem is the battery. When that battery goes, and who knows when they will, this is all brand new territory, but they will, $15,000 to $20,000 for a battery. So you buy a car under $25,000 if it comes from a dealer. If I think it's been a one-owner car, you qualify for a tax credit. Unfortunately, if you can't get some type of insurance on that battery and it goes, where the heck are you on that wonderful investment? I don't know. These are things you got to play with, and this is what we're dealing with. When we come to the gold market, we know that the market failed on that attempt back here, long time ago now, at the 18-day average of, at the 18-week average of closes, since this is a weekly chart, and it has slipped back. When we take a look, I think you'd agree the market's in a pause. You had this stiff decline, and all of a sudden, you're just going sideways right here. The market is also out of a downtrend. What do I mean by that? So let me come back, and I got this to work. I paid attention before I started this. I think you'd agree. On the swing line, and the brown line is a swing line. Oh, by the way, I am taking the time out. Today I began the first steps of now putting out a new charting course. I'm re-recording. It'll take me until near Christmas. I mean, it's chapter upon chapter, swing lines, everything. Redoing my course, bringing it up to date. And yes, there's major modifications to it. When it's ready, you'll know about it. But I teach the swing lines, and this is classic. Lower highs, lower lows. And then when a market picks up momentum, what it does is, you'll hear me use that term, gorilla glue trade. And it's often accompanied by a market making each day a lower low, not a higher high. And that's exactly what you had for almost 2 weeks. You do see that. Then the market started playing around, and this was yesterday, the 21st, outside day up. We broke the pattern. We now have, as you'll see, a higher high and a lower low, and we're starting to get a little bit of follow through to the upside. Where are the moving averages on the chart? The resistance is right here. The 18, 1949.90 is the first level. We were riding the support, and the market now has broken away, and this is what you call that short covering. So the market has to restructure. There's nothing here that's bullish or bearish, or is there? Not yet. You're still very much in the bear camp until the red line closes over 21. That's the enhanced Bollinger Band course. I can already tell you when I do the new course, I'm keeping the outside day course and the enhanced Bollinger Band course outside of my full charting course. I think that that's the way that I want to teach. And there's reasons for it. How many chapters? I don't want this to be a book of forever, okay? Like the book of Eli, right? I was just thinking Denzel Washington. But as the market's coming up here, it's still bearish. Are the pros selling? Probably until you lose that number. When I look at the gold-silver ratio, you can see how silver is now stronger than gold temporarily. And look where it's at. It's up to the 18-day average of closes. You're nothing like that in the gold. So this is the market that came alive, and it did it all at once, and I'll show you where. We'll just concentrate right here. The market on the 18th had lost the bearish reading, the 18th. So now I'm looking and saying to myself, the market's at 2273. It might go, if it doesn't re-embed, back to the 18-day average of closes, wherever that comes in red. This is where you're at now. So when you lose that momentum, it's like a rubber band that you keep pulling. And when you let go of it, you know how the trajectory goes, it goes the other way. Well, copper did the same identical thing. Embedded reading, you lost it. Tell me you're not making that run to the 18-day average of closes. In the platinum, embedded reading, you lost it right here, went up to the numbers. Got it? So these are, other than platinum, which is bullish right now, okay, you do have the higher lows, higher highs. So could it make a run to the 951.60? Yes, but the other markets are not. These are reactionary off downtrends. That's all they are at this point. In the dollar index, as long as you keep the embedded reading, and it is so hard to ride a trend like this, you get nervous, but you got to do it until you lose it. It'll be the red line under 79. I had clients that I told to buy yesterday, had them take small profits on half the position. Now they're riding this position on up. We have a nice little lead on it. And I'll be looking up here at the upper band. Maybe they should take some profit in front of the Fed chair talking on Friday. Otherwise, I wouldn't do it. So I'm looking if it gets there, and I'm really leaning that way, because you never know what he's going to say. I mean, if he says something inadvertently right or wrong, whatever it is, the market's going to hang on every single word. It's almost like tomorrow. What do you think's going to happen after they close the stock market? You know what tomorrow's all about? Tomorrow's all about NVIDIA. So the earnings are going to come out, the forecast. Did they pull forward earnings? What did they do? What's the backlog for these chips? Nobody seems to be able to get them. Blah, 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 blah. Is this going to be a $4 trillion company, as people are starting to think it's going to be? Their analyst calls are already for $800 plus. On the shares, that's another, what, 350 higher than where you're at? The multiples are insanity, but it can do it. Now, one of the things you want to trade in markets like this are these stock indices. And I love trading the micros, all right? They're my favorite other than currencies. My number one market I love is the currency market. And people go to me, why? It's the biggest market in the world. Doesn't mean I can't get wrong it, but I'm trading with the big boys all over the world, 24 hours a day, thickness of market. Yes, if you avoid and you try to avoid going into things that can hurt you, you watch it. Well, in this market, same thing. Instead of trading for $50 a full point, you're trading for $5. And you got volatility galore. It is insane. This is the value of ticks. I think most traders can afford that. The margins are 1/10 the size as well. And we really work with you on commissions and the like. Dollar aside. If you can't afford that, no point in being with us. And then you qualify for so much of what we have. Our research, everything else that we have. So give us a call, 866-973-2077. Talk to my brokers. They'll try to work with you for that. Could it be any easier? I don't think so. In the meantime, I'm Ira Epstein. You have yourself a great day. I will talk to you all at the next video. I'm going to do that right now. And of course, in the morning, first thing. Take care.